The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome to the show. It's Tuesday morning. Crude has finally started breaking some technical areas that we wanted to pay attention to and that we've been talking about, namely 48.78, just to get right into it. So we had a close above there, official close, 50.56 yesterday. And we always look at these situations trying to trade on the right side of the marketplace and block out one side or the other, the long side or the short side. And we talked recently, if you've been watching the show, about opting out on the shorts in this last week or so, and really trying to quantify where's the risk. Is the risk to be short now, or is the risk to be long? Well, I think the risk was to be short. Had a little bit of a divergent situation that started appearing. This is our daily chart on crude oil. This is the March contract. And when we started having lower lows in price action, higher lows in Navigator, and then we had just said, look, there were some fundamental things out there that I thought were starting to become a little bit appealing when it came to crude oil. Some guys, well, we could go into that for an entire day's conversation. But really the conviction now, in my mind, has been satisfied as far as, that may have been at least a temporary bottom. And it's really weird. You read articles just for comedic purposes sometimes, and you listen to news reports, and just to get an idea of the Monday morning quarterbackers out there, when oil was going to hell in a handbasket, everybody's like, oh, oil's going to $30. Well, as soon as everybody started talking about that, obviously, that's a sign in itself. But now this morning, I was just reading some things. So now that oil's rallied, what is this? 50? What do we reach a high this morning of? 51.55 from 44. So we've had a 15 to 20% rally in oil prices in 48, 72 hours of trading or whatever that is. You've got them now, just jumping on. $50 is now the new floor on this particular product. But all that being said, we have a inflection point on our dailies that I paid attention to severely at 48.78, and I just hope that we can pull back to that area on the close above, go back and retest for a really powerful setup. Now we got the close above, and for just guys who are not trying to pinpoint and trade this to the tick, that's a sign in itself that it may be okay to just get back in the water from the long side. Anything can happen with crude oil. There's no free lunch, and make sure you put your stops in. But I'm going to orient my stops now around the 48.78 area. The scanner that we use every day, if you're looking for inflection points on all those time frames, you can go into this thing being the scanner, and we can look up crude oil right there, and we can see that we've got a new weekly profile. I'm just kind of going through the motions here for you this morning on crude oil. We've got a new weekly profile or demand area that will be appearing on our crude futures March contract. Current box is giving you, which is just way up there in the stratosphere. As you can see, those numbers, 89.63, bottom of the box, bottom of the fair auction, 93.58. They mean literally nothing, because that's giving you, in this case, they don't mean a lot because that's in the stratosphere relative to where crude oil is now. But what does that mean? That means it's giving you the current box, which is in force still on the weekly, but it's also letting you know by way of this yellow cell here, which started appearing yesterday. If you want to go back and review that, this is an indication that a new profile is more than likely going to appear, and then we will have some new numbers relative to a Friday's close. Now, here's the numbers that we just spoke of, rounded off 48.78 on top, 45.08 on bottom. And this is, the areas that we, it was okay to be long, not okay to be short, in my opinion. If you wanted to be a little daring above that 48.08, that was the first confirmation that we got. And then the close above 48.78 is, it's very, very positive for the longs now. So 240s, we got a new profile attempting to appear up top. That in itself is something to pay attention to. And I'm going to pull up our landscape grid here of all of our levels, which you can easily see. There's that weekly, just not really, but it's also telling you that we've got a new weekly box that's attempting to appear here. So let's, and those levels are all painted for you down there. Okay, so let me see what's going on here. All right, so that's the story on crude oil. That's the daily. Here's that weekly showing that new profile that's more than likely going to appear. And here's the 240s right there. And there's our 60s. So that's the story on crude oil. Now, we've got to just kind of take a look at some usual suspects that are usually driving the market here. Here's the gold situation. We talked yesterday, about this level here to probably buy this because, we're still kind of in breakout mode on gold, and we've got a new profile. And we got, a little bit of a noise situation that happened the other day. I got stopped out of this, but now we had to kind of get back in the pre-market yesterday. We were looking at this, got back in the fair auction, came back and retested. And we've been as high today already as 1286. How are you supposed to trade this? We talked about leveraging off this 1267 area, and we reached a low yesterday of 1266 and a half, 1267 rounded off. But, what do we do now? And, it depends on what you're trying to take out of gold. I'm looking at this really as a kind of a long-term move north, and I'm kind of trying to block out a lot of the noisy situations on the lower time frames myself. That being said, I'm just looking to place stops below 1267 and maybe give it a little bit of a generous stop noise area and try to use targets above 1300 on gold itself, and just not paying attention too much to the 240s. Now, if you're trading this on a shorter term basis, I'm sorry guys, I'm getting blitzkrieged here by chats. If you're trading this on a short term basis, you've got leverage here at 1276. That would have been a target from 1267. And I don't see a lot of reasons to trade this on a short-term basis. We're kind of rattling around here, not a lot of direction. So again, I'm just standing by the intermediate view of stops below 1267. The S&Ps, we're gonna have to. Let's take a look at silver really quick. So to sum up gold in a nutshell, we're gonna, I'm looking at that 1267 as buy points again with stops down below, and that rally up to 1286 that we've had. I haven't really taken anything off because I'm looking at this from a little bit longer term basis. Now, silver, a little bit different situation. We talked yesterday about leveraging off those weeklies. I think John from Philadelphia called in, and we were looking at trading it north of 17 and then some targets above, because I don't really like silver as much as gold. Targets above at that unfair low on the dailies of 1273 rounded off, and yesterday we reached a high of 1275, or I'm sorry, 1775 and 1770. Mixed up here. $17 was the buy point, and we talked about targets of 1773 rounded off, and we reached a high of 1775. So that trade's kind of been satisfied, and gold's, this is somewhat of a tandem trade at this stage, but gold's obviously the leader. Gold could lead this down, in my opinion. And we're probably more than likely going to rattle around here between 17 and 1773. So I don't see a lot of direction in this right now relative to gold. I'm still a big fan of gold continuing to go up and possibly get above that 1300 and close above the 1300. But again, make sure you put stops in on those type of scenarios. We got to take a look at the S&Ps because we talked yesterday. Again, 1988 was going to be something to leverage off of. That went a lot farther down below there than I wanted to hang on to that. So I picked the battle there personally, got stopped out. And then we talked about the next battle point down below was that 1968 area. Reached a low yesterday of 1974, rounded off, and didn't get close enough for me. So that was the situation. As we got back above 1988, you got to take a hard look at going long this again. But we've gotten into that 1227, very important level from before that's not been forgotten, and we've reached a high of 1228 this morning. So what do you do now? Always what's going to happen on the right side of the chart here. Well, right now, and I'm going to pull this up. This is our breadth, still a little mixed up here. Weekly still positive. And I'm going to pull up our admin terminal and look at our long-term weekly breadth here, as we did yesterday. Just kind of blow this up, get rid of the middle ground. Guys who are subscribing to the scanner, by the way, already, I'd like to get this in your hands for you to take a look at this. So if you're scanner subscribers already, I'd like to get you an admin version of this for a while, just as a kind of a gift. We got some other information here that is really neat within the admin terminal. So make sure you send emails in. We'll try to get that taken care of for you. But right now we had that weekly close right at the balance line. And we actually did not close below last Friday, still positive. And that means on a long-term basis, we're still looking to buy this. So we were looking to load up at around 1968. And that just didn't happen, didn't get close enough yesterday. But remember, we've got a kind of a mixed bag here. Daily, weekly, still mixed up. It's going to be just kind of herky-jerky moves. Gold's obviously, crude oil is obviously going to provide a little bit of a bid in the marketplace if people get happy that that's going to possibly kill the deflation situation and also drive some oil stocks higher. And on that note, so the S&Ps, it's very, very non-directional. And you've just got to be, as they said yesterday on TV, I was listening, nimble. That's a pretty good word to use for this. 27 is going to be a big number for that. And when we come back, we're going to take a look at the XLE and the relative strength trade, as that has been the best trade against crude oil futures. We talked about that at 74.18. We're going to be right back to talk about that.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. Somebody had asked to maybe look at 30-minute gold. This is 60-minute gold. Remembering those big inflection points. Remember the big ones to pay attention to are the let's see, what do we say that was? 1267, not 1967. Don't want to give anybody a heart attack. Here's the 60-minute gold, and obviously we had a breakdown on 60-minute, and we're just going to cover this really quick. And the 67's the big number. You got to pay attention to that. And I don't think I've got 30-minute loaded up here. Let me load that. So this is a little bit more shorter term way to look at gold, obviously, but we've got a Vega indicator that's kind of green and red, as you can see, that just kind of does all the work for you. Here's the 30-minute, and there's really nothing down here, but the 67 is the big area. That's the, you really hope that you migrate into long-term inflection points, and we're at one right now. And for short-term traders, you got to pay attention to that. I'm going to load this back up with 60. Okay, so that's the situation on gold. Keep the questions coming if you guys want anything looked at. We talked about the S&Ps. We talked about crude oil. We got to look at the dollar really quick to cover some of the generics, and then we're going to get into some earnings stock situations that we might want to be aware of here. Dollar, had this box appear down below, as you can see, still trailing upward, higher lows and higher highs on the boxes. We talked about kind of sitting tight on the dollar and waiting for a possible retracement down into 93.67. That hasn't happened. Don't feel comfortable really going long the dollar up here. Here's our weekly view, looking at the raw contract for March. New box attempting to appear on the weekly. That's kind of a bearish sign in itself, new supply area. So this is kind of a waiting game. And by the end of the week, if we have a coincidental lineup in a new box appearing on the weekly, and then somewhere down here on the 93.67 area, that I'm going to feel comfortable about getting back in the water on the long side on the dollar. So that's kind of the point to look for. Here's the 240s on the dollar. Really not looking that longish on any time frame, to be honest with you. So it's, as far as buy points, as far as retracements, yeah, I love it, and I'm looking for support on the dollar. Got to take a look at the euro. Obviously, this thing's moving this morning. Here's the situation on the euro. Just would be ultra cool if this thing got into the 114.40. What is that? 114.47 area. Excuse me, I can't add today or round off. There's the area that we're looking at on the euro. That will be a kind of a selling point, in my opinion. We're still in a kind of a long-term trend down with not a lot of divergences going on here. We do have possibly, again, got a lot of these going on the weeklies this week on the generics. New demand area possibly appearing down here, so that's something to be aware of. But again, when you're trading this type of scenario, as we looked at that as a selling point below, as a selling point, as we got very near that point the other day, and we were talking on the show that we hope that we get close to there. You hope that you get close to that daily unfair low, and then you got a battle point again. I think the euro is kind of tradeless right now until that possibly happens. Any closes above 114.47, you're gonna have to sit on the sidelines on the shorts for a while until we get back down below there, or reach, believe it or not, the 116.80 area, which would be kind of unbelievable if the euro went up that high, but anything can happen. Australian dollar, this has been something that's kind of been like the euro situation, the gift that keeps on giving. You're just looking for inflection points on this. And, I see zero reasons to buy this thing. So the long side, in my opinion, has been blocked out of this. I wouldn't be trying to pick any battles on the Australian dollar right now. And there's not a lot of leverage down here. We broke down again on the 240s below 77.41, but that was before this show. And right now, if you're looking for areas to buy the dollar, the Australian dollar, I see zero reasons to buy that, actually. Things on their lows go lower. Remember that's possible always. Going to cover a couple more generics before we get going here for the rest of the show after the next break. The 10-year. So we had a little bit of a leverage point here on the 10-year at 130.21. We talked about really, until the technical damage ever happens, if that ever does happen on the treasuries, you just want to continue to look for buy areas on this thing. This has been just insane as far as the rate structure goes on these treasuries. I hear the music. We will be right back in just a minute, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. We were looking at the treasuries. Just going to finish that up really quick. Here's the daily. And we talked about this area up here, 130.21 rounded off, and close above, come back and retest. Got a little bit of a bounce here, but now we're trading below. And I think this is just a sit-tight situation now on the 10-year. That just didn't ramp up and keep going north here. And that's okay. We caught some really good moves on this product moving north or moving forward here. And now it's kind of a sit-tight. That's the inflection point to pay attention to. Again, I'm not a big fan of shorting the treasuries. I don't think this is just something we passed on all along, and that's been, turning the rents the same way every day. That's just been a great play, and you got some breakdowns here, possibly happening on the shorter term time frames. This is the 240s, but again, as we've had before, but they've been very rare occurrences and very short-lived. And again, I'm not going to be the hero and call the top on treasuries here ever until there's some decent reasons, as they're seemingly we're lining up on crude oil. So that's where we're at there, and that's the situation on the treasuries. If anybody wants me to look at the 10-year, I will. The 30-year, but I'm going to move on. Otherwise, here's Apple. Well, obviously, showing a heck of a lot of relative strength versus the marketplace, remembering that our scanner is kind of mixed up here on our views as far as the weekly and daily, which is what I focus on hardcore on the breadth. Really can't say this is a selling point on Apple up here. It has really, last week we hit it to the tick almost. What we reached a high of 120. Top of the box is 119.75, but that doesn't mean a lot. Those were all-time highs, and previous all-time highs were 119.75. So, again, we're kind of crowding this area. This is not the type of situation you want to see from the short side. I'll admit that. And breakouts are going to have to be bought on Apple above 119.75, and especially weekly closes. And then that's going to be the new level of support that you're going to have to pay attention to on this product. And, I don't use Apple products myself. A lot of people I know do, obviously. Obviously. That's statistically impossible to not know a lot of people that use Apple products at this stage. But, there's a lot of fundamental reasons that this stock more than likely can go up. If you look at balance sheets, if you look at cash, if you look at PE ratios, things like that. And again, this was an earnings situation that we had to be out of the market on, in my opinion, because anything could have happened. But as you can see, technically speaking, relative to the markets and a stock that actually drives a lot of the indices, especially the NASDAQ, this thing's not weak. And I think the short side right now needs to be blocked out on Apple. Let's take a look at Aetna. Had some news out this morning, trading a little bit higher, 93 actually. This was one of those, healthcare, obviously, or insurance-related stocks, that we kind of closed above, new all-time highs, came back, rattled around. That was a little bit of a stop-out situation, but now it's okay to get back in the water. 91.87 unfair highs in the weekly, and obviously 92.47. We're trading 93 right now, and that's going to be kind of a stop-oriented situation for me now. So in the long term, if you're looking at this on an intermediate basis, in a relatively short amount of time, Aetna has obviously kind of broken stride again, closed above, done the retest thing like we love. A couple little situations where we had to get stopped out of this on an intermediate, but right now you've had some support being these supply areas that have kind of trailed up here since October, November. And right now you've got a new level to pay attention to, 92.47. That's going to be the leverage point, and stops oriented around Aetna as we're trading 93 pre-market right now. We're going to go back and revisit a little bit here on the grains, because this is something I'm personally following. As we had talked about selling for the 1050 area, and we talked about buying some 950 puts. I'm still hanging on to those. Got a couple of weeks left, and we've reached a low of, in this move, 955. So ramping up back this morning into an inflection point, 972. I'm still looking at that as a sell opportunity on March beans, just to review that. Corn came back into that inflection point yesterday. If you've got the scanner, you've got this 379 that was sitting there, and we reached out of 378.5. So I'm going to call that satisfied. And all these grains to me look like they could actually continue to sell off. And I'm not looking at this from the long side or trying to pick any bottoms on grains in general. We got to take a look at natural gas really quick. Somebody asked me about that, and what's the story here? The story on natural gas is don't go long. Not a lot of reasons here, and continue to look for sell points. And if anything should have ever caused natural gas to go up, fundamentally speaking, this was probably the winner for it to happen, and didn't happen. So we're looking at inflection points to pay attention to. 2.1816. That's the leverage point on the short side on natural gas, and really nothing to hang on to down here as far as leveraging the short right now. A couple of other stocks I wanted to get into here. Tesla, as we look at this, here's a long-term weekly view. New supply area appeared this week, and a number that's not going to be forgotten is going to be that previous unfair low around 200. We talked about that. The only way to get long this was getting back above 200. That happened, closed above last week or 2 weeks ago. Went back and retested. The targets on Tesla right now are 224 on the long side. I feel like that's attainable. And you've also got another number on the daily here at 214, 215, but 224 is going to be my target on Tesla. A couple of other things we hadn't looked at in a while. McDonald's, you know, obviously had some decent earnings news. And here's the situation on McDonald's. 91.61 is going to be the leverage point on this particular stock, and the target's above 95.71. I don't like this as a long-term hold. I just think we're due and possibly going to have a little bit of a rise farther in McDonald's. So that's the situation on McDonald's. We're going to go back and look at Caterpillar really quick, because this is something, you know, some people were talking about, you know, do you just blindly buy this thing on discount down here? You know, dollar related, let's just kind of go back and think about that for a second. Dollar, more than likely, that 93.67, or I forgot the exact to the penny point we were looking at on the dollar pullback. But, you know, the dollar not having any technical damage here is not going to really help Caterpillar in general. Do you have some trading opportunities now? Yes. Do you have a new demand area that's happened? Without question on the daily. Not, I mean, for short term, I'm going to call this short term trading. 79.67 unfair lows on the bottom of the box, but I think you've got a selling opportunity actually at 82.23. But you got to pay attention to the dollar, because the hopes and dreams seemingly of this company right now would be to some degree relative to the dollar itself, simply put. And there's a lot more factors in Caterpillar's stock price than that, but I think that's kind of the go-to lean on fundamental, relationship that it's looking at right now. We got to take a look at the XLE, because this is something, you know, that if some guys out there had listened to what we were talking about the other day, that close above, go back and retest, we rattled around. But, you know, this is the situation. I mean, if you haven't noticed this, and you don't need me to point this out, the XLE has held up a lot better relative to crude oil. The XLE has held up relative to crude oil. And what we're looking at here, this 74.18 was a very powerful number that we were looking at, and targets above on the long term, we're going to look at 80.07. And as we look at the daily, we met those targets at 77.15. Now yesterday we closed above. So that's going to be the new level for the XLE. Support at 77.15 and targets at 80.07, if that makes sense. I'm going to restate that because I was a little distracted. I've got some tea going over here. 77.15 is going to be support on the XLE, and the next leg up now, since we met those targets and pulled back into that 74.18 area, the next target above is going to be 80.07. I actually feel like this particular ETF could move a lot higher, but that's going to be something we're going to have to pay attention to, the 80.07 right now. Okay. Excuse me, guys. I'm having trouble adjusting my screen here. The yen. Excuse me, where is the yen? Well, we've lost the yen. That's the, yeah, oh, here we go. Seeing ghosts this morning. Sorry about that. Here's a long-term view on the yen. Again, this is kind of like the dollar to me. This is something where you've got, the big Bank of Japan on your side of the fence here. They definitely want this thing to become devalued and continue to be devalued. You still got targets above the long term, 120.42, and then on the daily, as you can see, we've had a new profile appear in the last 2 weeks, and that unfair low held yesterday. And that unfair low is 116.67. We talked about that. We reached the low yesterday of 116.67. So again, this is something I think pretty neat to be able to orient stops around and just continue to trade the long side on the yen. And again, all these numbers and these levels. And by the way, we do have charts coming into this week. You'll see them by the end of before Friday. I hope. I think they're going to happen. And not only will you have a landscape chart, and let me just pull up the yen here. Yen. And if you haven't seen this before, you've got just tons of sectors and exchanges and ETFs to pull into now. But let's see here. Here's the yen down here. So not only will you have a landscape view to show the inflection points that we're talking about, there's that 116.67 area down below. You're also going to be able to hit a chart, hit an icon, pull up a chart. The levels are going to be painted on there for that. You're going to hit a cell, forgot how we structured this. You're going to be able to hit a cell, like so. If you want to see what's going on the 240-minute view, it's going to be pretty much, I hope, a standalone product. Then, not only giving you the levels, but also be able to get a chart snapshot and see the levels on the chart. And it's kind of two products in one with this breadth and being able to see charts, levels, landscape views, and hopefully being able to block out one side of the marketplace as you're trading. And here's our NASDAQ breadth, mixed up just like the S&Ps. No good confirmations on the north side or the south side right now. So that's the helpful thing to me. And as you can see, I'm going to pull up talking about the NASDAQ, I'm going to pull up our landscape charts on the NASDAQ here. This is our daily view. Get that out of the way. Kind of been mixed up here lately since January, and that's kind of the way the market's been, and no true direction because our weeklies on the NASDAQ, the long-term view has stayed relatively positive since around October 17th, and that's been great. We're obviously a lot higher from October 17th as we are now, but the mixed bag, the daily and the weeklies are just not coinciding on the breadth situation. And that's the way that goes. And you may start seeing that on Bloomberg TV, by the way. I talked to those guys about that, and they actually want us to be able to provide this as a new, never-seen-before indicator that they may reference on Bloomberg. It makes sense. We haven't talked about this in a while. The DAX, just wanted to hit that really, really quick. Relative to what's going on in the euro currency and a couple other things, the QE situation over there, the DAX new numbers, we talked about not shorting this thing. This is our daily view. Here's the leverage points now, still in the DAX, 107. Hold on, let me make sure that's correct. 107.87. And we had a close above there yesterday, so this is going to be where you can orient stops on the long side. Things on their highs go higher, guys. This is a scary instrument to trade if you've never traded it. And right now, I don't see a lot of reasons to be short this thing, as we've been talking about this on the DAX for a while. There's our weekly view. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back to the show. We're looking at the XLF right now, and I did a report a while back. Let me pull up the XLV here really quick, actually, first. And talked about using, on the healthcare ETF here, using the 6934 as leverage on the top. Got a little bit lower than that this week. I didn't like that, but we're back above. Again, the play, in my opinion, was get long these guys and get short these guys, the XLF. And that was relative to the top of the box, 2370. We reached some targets down below 23. It's kind of sad for me that we didn't have a weekly close below there, and we're actually rattling around in here on the XLF. And here's the daily situation. That was primarily, we had some inflection points lining up there. It's causing me to think that way, but I'm still relatively bearish on this. And anytime we can get some closes below 23, and here's that weekly, I think, technical damage is in my opinion, going to happen on this at some point. Not a big fan of being long the financials right now. If you're looking for something to not be long, I don't think this is where the value is. And if you look into some of the internals, and you can look at all those internals and find some of the weak things in the XLF, if you're not wanting to trade the ETF itself. What the heck happened? Okay. Let me get rid of everything here. Let me go into the XLF as we wait for that to come up here. I'm going to go in here and do a little sort. And daily, let's just look at daily and weekly below the box. Let's just look at that. Okay. So as we can see, a couple of things that are just glaringly weak that may be the relative strength trade on the south side here. Progressive Corp, Chubb, Berkshire Hathaway. Not actually one of the ones I would choose, but Progressive Corp and Chubb, I would take a hard look at if you're looking for some weak stocks in the XLF to trade on the south side. So PGR. Ooh, ouch. And we had that close below last week, below 26.17. And obviously, just like the XLE on the north side relative to crude oil, if you're looking at the financials from the negative type situation, now you've got some candidates that are much better plays possibly to be on the short side relative to trading the entire basket from the short side, which some of these things are really showing their hand, so to speak, as weak stocks. Got about a minute left here, guys. In closing, 2027 on the S&P is still a big number. We've hit that this morning, backed off, and on the south side, 1988. So we may bounce around in that range, and we probably are going to still have the volatility. Remember, crude oil is trading higher, and the market may just kind of continue to like that. So that's the way we're headed for the rest of the trading day. I hope we've covered quite a bit for you today. Anytime you guys want to call in, make sure you do that. Final note for today, make sure you, when you're trading and sit in front of these screens all day long, make sure you get up, walk around every hour. Make sure you take deep breaths. A lot of times when I'm sitting here, I find myself taking short breaths, stressed out sometimes. Try to take a break from these screens every once in a while and come back. It's not a bad thing. You guys have been great, and we'll be back again tomorrow. And stay tuned for Steve Rhodes. Thanks very much.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.